Welcome to this explainer. Today we're going to take a concept that usually puts people to sleep, inflation, and completely demystify it. And we aren't going to look at boring charts or dense financial textbooks to do it either. Instead, we're taking a trip. We are going to explore a jungle economy populated entirely by monkeys, bananas, and leaves. By the end of our time together, you're going to have a crystal clear understanding of exactly how the different types of inflation work, just by looking at how our primate friends handle their favorite yellow fruit. Let's get into it.
So let's start with the absolute golden rule of our primate universe. If the monkeys only have one single banana, man, that banana is incredibly rare. And because it's rare, it is highly valuable. But, if the monkeys figure out a way to grow a ton of them, bananas suddenly become super common, and when they're everywhere, they just aren't worth as much. It's the absolute bedrock of economics, right? Scarcity creates value and abundance diminishes it.
This perfectly sets up our first two major economic shocks. Picture two completely different scenarios. In one scenario, the monkeys just wake up and decide they want way more bananas. Their appetite just explodes. In the other scenario, it's a completely different problem. The banana farmer simply has way fewer bananas to offer them. Let's break down exactly what happens to the price of a banana in each of these two specific situations.
Let's start with that first scenario. Imagine the monkeys suddenly demand way more bananas, but the farmer is producing the exact same amount as always. What happens? Well, the banana becomes rarer compared to how much the monkeys actually want it. Since every monkey in the jungle is fighting over that same limited pile, the price naturally shoots up. In economics, this dynamic where consumer appetite totally outpaces a steady supply is called demand-pull inflation. Literally, the demand is pulling the price upward.
Now, flip that around. What if monkey demand stays totally flat? They just want their usual daily bananas. But maybe the farmer had a terrible harvest and barely has any bananas to sell. Once again, the bananas become rare. And once again, the price climbs. But the trigger here is entirely different. We call this cost-push inflation. The shrinking supply is basically pushing the cost higher, even though the monkeys haven't changed their buying habits at all.
Okay, so watch how this builds into a massive chain reaction. Picture this. A monkey buys a banana, eats it, and it's the best thing ever. So they go tell all their monkey friends, right? Word spreads like wildfire. Suddenly, there's this crazy surge in popularity, and the monkeys just rush the store and buy up absolutely every last banana. The poor farmer's inventory is totally wiped out. To keep up with this wild new demand, the farmer realizes, wow, I've got to expand and plant way more trees.
But as we know, expanding a business is definitely not free. When the farmer goes out to buy what they need to plant those new trees, they hit a snag. Because every farmer is suddenly trying to plant more trees, banana seeds are way more expensive now. The farmer is taking on these heavier costs just to keep operating. So what do? Well, they make a simple, necessary calculation. Since the seeds cost more, they have to raise the price of the actual bananas just to cover their own expenses.
And here is the crucial point to take away from that. When the farmer passes those rising operational expenses directly onto the hungry monkeys at the checkout, that is the textbook definition of production cost inflation. The monkeys aren't just paying for the banana anymore. They're paying for the increasingly expensive seeds and labor required to actually grow that banana.
All right, up until now, we've just been focusing on the fruit itself. But you really can't understand inflation without talking about money, or, in the case of our jungle, leaves. So let's introduce the local currency, leaves, and see what happens when the monkey government decides to get involved in this delicate little economy.
Imagine a scenario where everything is perfectly stable. Nothing has changed at the farm, the monkeys' appetites are totally normal. But suddenly, out of nowhere, the monkeys just have way more leaves in their hands than usual. What happens then? Well, because there are just so many leaves floating around, the leaves themselves lose their value. The farmer realizes those leaves aren't worth as much as they used to be, so he bumps up the banana price to compensate. This is monetary inflation. It's inflation caused purely by changes in the money supply, or leaf supply, rather than the goods themselves.
Now things get really crazy when a government tries to fix this. Let's trace this vicious little cycle. Step 1, the price of a banana goes up, and the monkeys are furious because they can't afford it. Step 2, the monkey government decides to swoop in and help by printing and handing out way more leaves. Step 3, flush with all this new cash, the monkeys rush out to buy more bananas. And step 4, because of this huge, sudden spike in demand, the banana price just shoots right back up to keep pace.
And the thing is, the monkey government just keeps reacting to this. Prices go up, so they print more leaves. Monkeys buy more, prices go up again to meet demand, so the government prints even more leaves, and prices literally skyrocket. It is a completely ridiculous, endless loop. When price increases become this rapid, just spiraling totally out of control because of constant currency printing, we call it hyperinflation.
As you can imagine, it gets to a point where the whole system is just broken. The leaves are practically worthless because there are billions of them blowing around, and a single banana costs a literal mountain of leaves. It gets so out of hand that the government has to take drastic action. They actually just gather up and burn all the worthless leaves to reset the system. They announce to the whole jungle, okay, leaves are done, sticks are the new currency.
I know it sounds incredibly chaotic, but here's a secret. Inflation isn't always a disaster for every single monkey. It really depends on your situation. For instance, if a monkey's leaf income goes up at the exact same rate as the price of a banana, hey, that monkey is happy. Nothing really changed for them. But if a monkey's income goes up and the banana price somehow stays exactly the same, that monkey is suddenly, as they say in the jungle, absolutely filthy rich. But here is the kicker. If a monkey's pile of leaves stays exactly the same, but the price of a banana goes up, well, that monkey becomes poor and very, very sad.
And as our source material so perfectly puts it, monkey sad. Monkey is all of us. When our wages, our pile of leaves, stay exactly the same, but the cost of groceries, rent, and just existing, our bananas, gets more and more expensive, we feel it deeply. It's a highly relatable reality for our own wallets, isn't it? I mean, we've all been that sad monkey staring at an overpriced banana at the grocery store.
So this brings us to a really vital, actionable question for anyone trying to survive in this jungle economy. If just holding on to a pile of leaves guarantees that you're going to lose your purchasing power over time, how do you protect yourself? How does a monkey actually avoid the devastating effects of inflation?
The solution is actually remarkably straightforward, but it requires a total shift in mindset. To avoid getting crushed by inflation, a monkey shouldn't just hoard leaves under a mattress. A monkey needs to invest their bananas. By investing, those bananas will actually grow and multiply over time, generating even more bananas in the future. You literally have to put your resources to work so their growth outpaces the rising costs all around you.
We've seen how just a tiny change in banana supply, a sudden surge in monkey demand, or a government printing way too many leaves can completely upend an entire economy. And because inflation can sometimes get really, truly bananas, I want to leave you with this final, provocative thought to wrap up our explainer today. Take a hard look at your own finances. Look at your own leaves. What steps are you taking right now to protect and invest your own bananas for the future?